Dear students, welcome to the class of financial accounting. Hope you are fine. So here comes your fresh topic, that is income statement. In this topic I will provide you insight about the income statement. Let me tell you here first of all what is income statement. Actually income statement is a measure of the performance of a business. Through the income statement, the accountants try to measure the revenues and expenses of an organization during accounting period. And normally accounting period starts from 1st January and ends on 31st of December of that specific year. Income statement actually comprises of two major accounts. The first one is called a trading account and second one is called profit and loss account. We also use different names for the income statement. The names are statement of income, statement of earning, and statement of operations. A period which is covered while preparing the income statement, that period is called accounting period. We can also express income statement through an equation. In that equation you will deduct expenses from the revenues, and your net result, if positive, it is your profit, and if your net result is negative, it is your loss. So in your screen you can see a light green block, that is actually the heading of income statement. So you can see heading comprises of 3 or 4 steps, or you can say portions. The first portion belongs to the name of entity. Here name of entity means name of the organization. So you will write the name of an organization on the top. After that the title of statement, and here title of statement is income statement. Third number is the time for which this statement is being prepared by the accountants, and I just mentioned it is around about 1 year, which likely starts in month of January and comes to an end on 31st of December. Next to unit of measure means the measuring unit in which you will measure your income as well as your expenses. Now in second slide you will see 3 portions, and these 3 portions which are in blue will give you idea that income statement generally divided into 3 main sections. The first section belongs to the revenue section, second section belongs to the expenses section, and finally the net income or net loss section. What is revenue? Mostly students ask. Revenues are earnings from the sale of goods or services. So you can say it is the sale proceeds of any organization. So what organization generates after selling services or after selling their products, that becomes the revenue of that organization. Here comes the expenses which we record or report in income statement. Expenses are dollar amount of resources used by the entity to earn revenues during a period. Let me tell you here, expenses are actually cost of doing business. So what cost we incur to earn revenue or to run business is your expenses. Now a short description, or you can say a short detail of your expenses, and I just highlighted all these expenses in red words. Now you can see on your screens, first expense, that is called cost of goods sold. Next to that, selling, general and administrative expenses. Next to that, research and development expenses. Next to that, interest expense. So a list of total expenses will be deducted from your income, and you will get a net result of pre-tax income, that is 4400. Now after that you will deduct the amount of expense, you can say tax expense, from that pre-tax income, yeah, income before tax, and finally you will get the net income. So you can also call it is income which is available for distribution. A very short detail about the expenses which I just shared in the previous shield. The cost of goods sold, actually it is that cost which a businessman incur to produce thing or to develop thing. So that's why it is called cost of products which are going to be sold. So when we sell those products, it becomes cost of goods sold. Normally we say it is all those expenses which are directly connected with the production or development of various goods. Next to that, there are indirect expenses named selling, general, and administrative expenses. All these are operative expenses which are not linked directly with making of goods, but these are those expenses which are making business possible. Next to them, there are research and development expenses. These are those expenses which are incurred by the businessman to develop new products, to provide new variety of products to the people according to their requirements. Next to them, there are interest expenses. This is that cost which we pay or businessmen pay against the borrowed funds. Next, income tax expense. Business pay tax on their profits according to their volume of profit. So this is another form of expense which is incurred by the business. So in this shield you can see sales revenue which is generated by the business is 37,436, and from this revenue these specific expenses are deducted, and finally after the payment of tax expense, net gain to the business is 3,300. So when revenue exceed expenses, we report net income. It means when revenues are more than the expenses of the business, we get the net result, and the name of that net result is net income, or simply it is the income of organization. But on the other side, when expenses are more than the revenues of the organization, we will get the result in a negative form, and that is called net loss of the organization. So it was a very brief and short introduction about the income statement. So here guys, when expenses exceed revenues, we get the result in a shape of loss. So loss means the negative result of an organization, means the business is not able to generate revenues more than their expenses. So this is all about the income statement which I shared with you. If any query, if anything you want to ask me freely. So wishing you a very good luck. Goodbye.